Hey guys, Mike here. So another interesting day in the market, and we had just a boatload of news come out. Obviously, the markets were closed yesterday, and obviously the Fed minutes hit today, and so we'll go through that. And then also Google had some very interesting news and data come out, which I think will surprise a lot of people. It surprised me, I'll be honest with you, just because of all this talk with Chat GPT and Microsoft's Bing and everything else, and the death of Google and everything else. And this was actually very surprising. That's obviously why the stock was green today, and so many of the stocks were red. But some other data came out about us, the consumer, right? Like how strong we are, when our savings are going to be depleted again, all this stuff. And I'm going to, bring up something that I hope makes sense as to why I think, all of these projections have been wrong for the last 12 months. And we'll see if you agree or not, okay? And, one thing I'm going to bring up here, this came out about rents, right? And this is the National Rent Index, and month over month, you can see, this is 2021, some huge increases, right? Then you got 2022, and then you got 2023. And of course, this to me, obviously it's area by area and everything. This is just an index people follow. In my area, rents are still going up. Let us know in the comments if yours are coming down, because some areas they say are just dropping off a cliff right now, which is actually good, right, for consumers and stuff. And when you look obviously year over year, because you just saw 2021, 2022, 2023, this is the increases obviously have come down. It was going up fast in 2021 and 2022 when inflation was just running rampant stuff, which especially is good for young people especially. Now, of course, what is that going to affect? Well, it's going to affect savings, right? Everybody's trying to pinpoint the savings, and here's another projection. I think it was J.P. Morgan said we'll run out in October, and now another bank's come out and said, oh, it's going to be over with in like September 2023, and they're going to run out of money. And of course, one big reason for this, in my humble opinion, is just the housing market, right? And I'm going to address that in just a second, but this is year-over-year change in existing home sales and the S&P 500 trailing 12-month operating earnings per share, right? Usually, not perfect, but they kind of go hand in hand sometimes. And I'll explain to you really why that is. But you can see, obviously, home sales, we know, especially existing home sales, people aren't moving out. I'm not moving out. Are you moving out? Like, who's going to move out, pay twice as much for the same home they live in now and 3 times the rate? That just doesn't make any sense unless you're forced to do it. Maybe you got to move and get a new job, something like that, right? And maybe you're downsizing. That makes sense too. And so, when you look at this, you can kind of see, okay, well, obviously home sales have fallen, but the earnings haven't really followed. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And the reason why that's surprising, and what, again, this goes twofold, right? What's holding up consumers, right, is what's not out there that used to be out there, and which was norm. First-time home buyers. That's really the big ones, right? Because when you're a first-time home buyer, do you remember buying your first home? Seriously, what'd you have to do? Most likely you're coming out of an apartment like I was, so you had to go buy furniture, you had to go buy appliances, you had to go out and buy patio furniture and stuff, you had to go buy equipment to keep up your lawn now, right? And so TVs, all this good stuff, right? So the big purchase items is what we're talking about here. And so, not to mention, probably putting at least, I'd say 5% at least, right, as a down payment. And so, what's that allow people to do? Well, it's allow people to sit there and keep money in savings. Okay, that's what it's allowed to do, and do something else. What else? Of course, not having to pay your third largest bill, which is your student loan bill. That also helps as well. But, the other thing is on the earnings side, that's what's surprising in a lot of people, these earnings, like, Whirlpool and all these other companies, like, if people aren't purchasing homes like they used to, how are they holding up on these earnings with the appliances, Home Depot, of course, and all the rest of them that sell the lawn stuff, furniture, the lawn mowers, weed whackers, all that good stuff, and then of course furniture stores, right? What's holding that up? And so that's the surprising part, and that's why usually when home sales fall like this, you get a fall in earnings, right? That just makes sense, but earnings are still holding up in that area somewhat. So, it is rather surprising, but it's also, that's why these projections have been so far off for so long. They got to be getting rid of savings. And plus, on top of that, what are we doing for the first time in 15 years? We're drawing interest, right? And I know people don't think, well, yeah, but I only have, $1,000 in savings. Yes, you're looking at yours. Imagine $2 trillion, right, drawing 5% savings or even 3%. it accumulates pretty fast as a whole, as our society, right? Not just one person, two people. And so that's also, help with the savings and stuff. And so, and we can't really return to a normal housing market because, again, existing home people, I'm not moving. Not unless I'm forced to move, there's no way. The house across my street just came for sale. Literally almost twice as much, 3 times the rate it would cost me to go into the same house. Why would I do that? Why would you do that? I mean, unless I'm forced, or unless we were going to downsize or something. No, I'm not going to do that. And so most people aren't doing that. So they're almost being forced. Home buyers already go out and buy the new homes, of course. I showed you those that popped up. And so, which, again, this is going to be interesting because as somebody put in the comments, and I appreciate it, when I was talking about student loans, yeah, there's going to be, the president said there's going to be a 12-month ramp up, right? But I also read another report when I started researching that even more, saying that like 1 out of every 10 people are already behind in other things, right? And they ain't even got the student loans to have to pay yet. So, but most people will start to pay those student loans in October because you don't want to just let it sit there and accumulate interest. The people holding your loans would love it for you not to pay. They're like, this is great. Let that interest just accumulate, baby. Let's go, And so, that's a whole different story. But we'll see. And the one thing I'm going to keep my ear to the ground for, and you should too as well, I'm sure there'll be reports coming out probably in November saying, okay, well, what data we got to show what percentage of student loan borrowers started paying in October? And if you see quite a bit, like a large percentage not paying, I say 1/3, 33%, that's a problem. That's a freaking problem, let me tell you. All right, that's not a good thing. It's not people just going, I'll get to it when I get to it. That means people are going to be struggling to pay. So that is something to keep an eye on. You want to see, if you're rooting for our economy and everything else, a high percentage of people starting to pay in October, okay, and pay on time and stuff. So just keep that in mind. Now, with the market, it was an interesting one, but I do want to say this. You want to know where big money puts their money and why? Here is the most profitable companies by sector. Okay, this came out today. ExxonMobil, #1 for oil, right? I mean, just massive record amounts of profits. Let's see. Saw record profits in 2022. Yep, sure did. Technology, Apple, by a mile. I mean, it says Apple is the most profitable company in the world with a 43% gross margin as of Q1 2023. And you can look at the rest of these. I mean, Visa, when it comes to credit cards, Pfizer in the medical industry, obviously. P&G, they make everything, household products. I mean, there's nothing that's not made by P&G. I swear, it seems like that. Nike always been getting hit hard, but again, it makes a boatload of money, right? John Deere, and so you can look through those. Warren Buffett's Coca-Cola right there. That's where big money stays and goes, and that is why, okay? Because they have a clamp down on their sectors. Now, China, of course, came out, and they had some more news come out about them slowing down. I believe it was in the services sector. I told members. And this is funny to me to see this, but China underperforms Japan by most since 2008. And I told you months ago Warren Buffett was heading into Japan. Of course, big money followed right along with him. China, again, they're still kind of waiting around and say, hey, well, we're going to start sending out some checks, start doing some more stimulus. Like, what are we doing here, right? And they cut some more rates today, I believe it was. But it's just their housing sector is just a hot mess right now. And that makes up the majority of their wealth. So people are kind of, I don't know if it's just that or maybe it's the tensions between U.S. and China as well, but people are reluctant to do that. And there are some Chinese stocks that are doing well, just FYI, and some that are just flat. But when you look at this morning, what's funny to me is I want you to look at how many stocks are actually green, and you're going to see a wave of red, right? I mean, you look at this, there is probably, I'm guessing on this, 92% is red out of all these stocks on this list right here, and especially tech. And you just keep going down, and you're like, wow. And then you look at that, you're probably thinking, man, the market must be really red, right? And it was at 0.5% for the market opened up. This is about an hour and something into it. But then look at the big boys. Look at the big boys, the ones the weight, right? They're all green. And then when you look at it, you go, wow, Qs are actually green after all that mess? Yeah. SPY's only down 0.14. Yeah, but look at IWM, see? IWM don't have those big boys. And so it gets to hurt. And of course, the market just kept recovering with those V-shaped recoveries. But I told you, these are the ones. If you're looking at SPY and QQQ, that's it. They can be green, especially if they're massively green like Meta was. And it's going to pull up the Qs especially, and the SPY will be close to flat because you saw that red right there with the banks and everything else. Now, by the end of the day, what happened? Obviously, semiconductors, right? People taking profits. They're up huge in this, okay? And that's something that, we'll see if we continue to see that. but no surprise there across the board, all red. Okay, but then look at where money went to. All right, this is clear rotation. Again, those cruise stocks and airline stocks, nope. I'm telling you, green, 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 right? They see us traveling, we're doing our thing, and they're running this up while they can. How long will it last? We'll have to see, okay? But that is clear, like sector rotations, profit taking versus putting those profits somewhere else, all right? So IWM, obviously, we've talked about this a lot because we're looking for it. We've never had bottoming process without small caps absolutely participating. Again, they don't have those big or the Magnificent Seven type stocks to pull them up, right? And of course, it was down by 1.2% one point in time. It fought its way back and everything. And you know, you got that all-time high anchor VWAP's got to get through 189 your key. Where it does not want to go is any lower, because you see how this thing moves through these volume gaps and stuff. And just Google it and look up what this stuff means and stuff. But you know, you can see it plain as day. It moves up through them really fast, and it moves down through them really fast. Okay, and so it needs to hold 178 for sure. It needs to get above 189 and close above 189 to continue to move up. All right, and you can see the RSI right there on the hourly. Good thing is, you know, whenever this is one of those ones, whenever it gets oversold, it usually gets a very quick bounce. That's usually what happens here. And you can see it move through that volume gap really fast this morning, hit the node right there, a little resistance, right? Support and everything. I mean, not resistance, support. And hit that support, and it held up and then kind of started to recover, right? Because it didn't want to go down any lower, all right? So keep that in mind. And so this is one we got to keep watching, you know, to see what's going on. We have a higher percentage getting above their 200-day moving average. That's a good sign. But this thing needs to get above 189. Now, Google, you can see that big candle. Rarely, you know, it'll move. And again, on a day like today, for it to be up 2.5%, 3%, that's good for Google, right? And so, of course, people are expecting this to go down that gap. But when you look, what happened was, and this is what really surprised me, right? The part about, you know, B of A basically reiterating a buy or whatever, that wasn't surprising. But it was at the bottom when it comes to Google search. And it says Google search engine market share was 92.7% in June, up 80 basis points from a year earlier. Bing's search share was 2.8%, down 40 basis points from a year ago based on this new data coming out. And it says web traffic data suggests Google visits are steady, while Bing/ChatGPT uses have been slowing. And if this is true data, you know, that's very surprising to me. Let me know at the bottom if you're surprised, because that was the big worry. Like, oh man, Microsoft's going to kill them in the search engine stuff, and you know, ChatGPT and all this other stuff. And I don't know, I'm just curious to know if you use it. I don't use Bing and I don't use ChatGPT. I've actually tried the AI stuff. It just, I don't know, it doesn't really help me or anything. Like doing some of my son's homework or something, sure, but I've tried other things and it just, I don't know, it doesn't interest me a bit. But yeah, let me know down the bottom what you think, if that surprises you or not, right? Now, Tesla, that was another one. You know, green today, basically kind of consolidating here, right? Because, I mean, again, this is a holiday week. You know, I don't say the volume was, you know, all that great or whatever. But, you know, it held what it needed to hold. That was kind of the key. We'll see if this RSI right here on the hourly means anything, and a little bit of divergence going on. You know, basically setting higher highs in the stock, you know, higher or lower highs on the RSI. We'll have to watch that. But the big level to really start watching is, you know, this trend line right here, which you can see, you know, goes back to 2020, and, you know, it's respected it. And when we look in the smaller time frame, you see what I'm talking about, because that's what it hit multiple times a day. Hit that, it was like a brick wall, and just started consolidating sideways. So it's another level it's got to try to break above, right? And how does it do that? How does Tesla really get moving? It's when the call options start going crazy. It's because right now, what's been pushing it? News. Every day there's been news out about the chargers or deliveries or something's going on, right? And you know, if you hadn't noticed, usually when there's no news out or you don't get some crazy, like, and usually that's why the call options start rolling in, because there's some kind of news came out. But, you know, or there's not some crazy amount of call options coming in, or even put options to drive it down. It kind of consolidates sideways, maybe trails down a little bit. That's just how it is, you know. And so we'll see if there's some good news coming out. What other companies going to sign up for their charging network and things like that? We'll have to figure out. And last, there's Meta, right? Started off really big today. It was up like 3.5%. Still in this wedge, if that's how you like to look at it. Everybody thought it was going to 300. The 300 calls were going off the charts and everything, but it didn't make it there today. That's what everybody's aiming for. If we go to weekly, in case you didn't see the video from the other day, this is what I'm talking about. That's where you're going to find some resistance right there for sure. And so again, it's still in that gap fill and everything. But you know, I mean, this is another name, right? I mean, it's either the news, which causes a bunch of call options, which keeps driving it up, and big money's still buying at these levels, okay? And so we'll see if they get to 300 and finally decide to dump it for a while, a little bit, to try to get in cheaper. But you know, right now this market, I mean, there's many reasons it's moving up. We've talked about them all. You know, whether you want to call it, because they think the Fed's going to pivot, even though on the minutes today, guess what? You know, shocker. They still see no kind of Fed rate cuts at all, and then quite a few of them see a hike coming this month, right? And so that's something to keep in mind. But again, we're sitting here at a crazy, you know, fear and greed index. A lot of stocks, even the indexes, are overbought and stuff like that. And so this could be either one of those where we start consolidating sideways, letting the moving averages catch up, right, and letting that fear and greed index come down some. And that's kind of what I'm thinking is going to happen, because again, first part of July seen as bullish usually, right? No doubt about that. And then but again, with earnings coming up on the 14th from the banks, that's what we got to see. I think that's because CPI we expect to keep coming down, right? So unless it surprises us on the upside, which some people project, but unless that happens, the market's kind of over that, right? But it's bank earnings on the 14th, if I'm not mistaken. Correct me in the comments if I'm wrong on that. And then, of course, you'll have the Fed later on in the month and stuff. But I think earnings is huge. And you could have the market kind of just consolidate here maybe and say, you know what, let's wait and see what bank earnings got to say. Or because it is 4th of July week and everything, we had a half day on Monday. We were closed yesterday. You know, a lot of people don't really get involved in the market too much sometimes while the volume's lower during this kind of week, and it is summertime. But you know, that could be happening as well. So you know, I'm not expecting big drops, big pops this week. Could happen because we see what kind of market we're in. But I think next week's when we're really gonna start getting either ramping up or ramping down a little bit, one of the two. Let me know what you think down in the comments and stuff. And it seems like every earnings quarter we go, man, it's going to be the most important earnings ever, right? But, everybody wants to hear from the bank, especially when it comes to the lending, the consumer, all the savings, and what they're seeing on the forefront and stuff as part of the IPOs and everything else. So, and how restrictive they're being on the lending and stuff. So, anyway, hope you guys got some out of this. Please hit the like and subscribe button. Let me know your thoughts and stuff on the market and everything. And I will see you guys tomorrow.